could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say, we really can't see, so let's slow down.
That was the Federal Reserve Chairman just a short time ago talking about the future of interest rate cuts and that the Fed may be forced to slow down with any more rate cuts because of fog. What fog? What's he talking about driving in the fog? I promise I'm going to tell you in just 30 seconds. Hang on, but before I do that, you should know that today the Fed cut interest rates by 0.25%. That means the federal funds rate is now sitting at between 3.75% and 4%. This is the second straight meeting where the Fed cut interest rates, and it represents the lowest interest rate we've seen in 3 years. But it was not a unanimous decision because the U.S. economy has two different problems. The labor market is definitely weakening, and inflation is definitely going up. Both things are problems for the Fed, but if they deal with one, it may negatively impact the other. So, for example, if the Fed cuts interest rates, which would make it cheaper for employers to borrow more money so they can hire more people, they then run the risk of having inflation go up. And if the Fed raises interest rates to get inflation down, then you run the risk of employers cutting jobs or not creating any new jobs or hiring any new people. You see the problem there? So that's the current situation. But let's talk about this fog. What is he talking about? Well, the fog is being caused by the government shutdown. See, the Fed uses data, not feelings, not vibes, data to make monetary policy decisions, like a decision to cut interest rates. Well, when the government agency that collects and reports all that data is furloughed because of a government shutdown, that means those reports are just not available. For the record, the Fed uses several other pieces of data from outside sources to make decisions, but they definitely rely heavily on what they call the gold standard of data, which is the government data. And without it, the road is foggy. So what Chairman Powell is saying is that depending on how long this government shutdown lasts, that may impact the amount of that gold standard data that the Fed will get before its December meeting. And because the U.S. economy is so tricky with what I'm talking about, the jobs market and the inflation, instead of going ahead with another interest rate cut, which is what was supposed to happen in December, the Fed may just pump the brakes and wait because of that data fog. Now, Chairman Powell also acknowledged something else today that I want to bring up because it is something that you have been talking about in my comments for months. So the gold standard data on jobs from the government has been showing that, yeah, fewer jobs are being added and yeah, companies aren't hiring as much as they used to, but the unemployment rate is still relatively low. So on the surface, the jobs market looks pretty good. But you've been saying the jobs market is trash and it's impossible to find a job. And when it comes to inflation, the gold standard government data shows that inflation is, ticking up, but only on certain things. And at the same time, consumer spending is still up. So things may be a little more expensive, but the American people are just tolerating it fine. But you are saying that is not the case. You can't survive. Things are just too expensive. And you have to get multiple jobs to make ends meet. Well, here's what Powell had to say about that today.
Consumers at the lower end are struggling and buying less and shifting to lower cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that. And so we think there's something there. The reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
But the Fed hasn't done anything about it yet because the chairman said the price increases are not done yet.
There will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects. But if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory. This is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up.